Hey New York City real estate buyers and sellers, it is time for our monthly market report. We're going to take a look at what happened in the market in November. We're going to look at supply, we're going to look at demand, we're going to look at liquidity, we're going to look at the pulse, and stick around until the end of this video for one of the most important stats that you need to know whether you're a buyer or a seller in the Manhattan market. I'm Dewey, I'm your New York City real estate resource. Please take a moment to like, subscribe, hit that notification button, and let's get started. Okay, lots of interesting things happening in the Manhattan market as we wind down our fall season. Remember, we have two main sales seasons. We have the fall and we have the spring. Doesn't mean that deals occur any time of year in Manhattan, but those are the two major times. And this fall has been very interesting. There's a lot of trends and data out there that's beginning to tell us what may happen next year in the real estate market. And we will certainly talk about that in our final market report of the year. But for right now, as always, let's start out with supply. Now, supply actually ticked down 1%. That's actually pretty low for this time of year. It is very normal for our supply to start ticking down. As I said, we're ending our fall season, so naturally supply is going to get a little bit lower. But there are still things out there, and there are still new units coming on the market each week. There's also a balance this time of year of units being pulled off the market. Perhaps they were overpriced. Perhaps the sellers want to try to wait until spring to where they'll be a little bit more bullish about the pricing. Whatever it may be, things start coming off the market this time of year. So it is very natural to see supply tick down at this point in the year. With that said, looking at the new listings on the market, that number did fall by 17%. Again, very normal. We'll probably see that trend continue to happen until about the end of February, maybe the middle of February if people are feeling very bullish. But the middle of February to the end of February is when we'll start seeing new listings come on and probably that number tick up. But for now, it's going to be very normal to see that new listings number continue to tick down for the rest of the year. Now, as I promised, we're going to get to that stat that you need to know whether you're a buyer or seller in the market. But before we do, we've got to look at what really counts in this market, which is pending sales and contracts. Let's look at the pending sales first. The pending sales are actually up 2%. That is showing us a lot of market resilience for the Manhattan market. And in fact, if we look at the chart there, the black line there, we are having one of the best years since 2021. If you understand the Manhattan market, you understand that 2021 was really a banner year for sales. It was an outlier. Everything was selling like gangbusters. And since then, we've sort of been in a recovery period. This is telling us that we really have recovered. We're in a very good, strong market right now. So the recovery has happened. It's going to be interesting to see where it goes in the fall. And another reason to be very positive about the Manhattan market is contracts signed are up 18%. No matter how you may slice it, 18% increase, that's looking very bullish for the Manhattan market, which probably means come fall, it's going to be a very strong real estate market. Okay, let's take a look at the overall health of the market, and we do that by looking at the market pulse. Remember, this is a number that is generated, that's a ratio between supply and demand and some other factors in it, and it gives us a nice, neat number to look at and determine whether or not the market is favoring sellers or buyers. If it's above zero, it's favoring sellers. If it's below zero, it's favoring buyers. We're at 1.4. Now, don't get too excited about that because really what that means is we're in a neutral market. Even though it's above zero and it's technically favoring sellers a bit, we need that number to be 4 or 5 for it really be a strong seller's market. So right now, we are still in a very neutral market. Now, some sellers may say, why should I sell? Some buyers may say, well, it's not favoring buyers, why should I buy? But in a neutral market, a lot of deals can get done because we're not favoring one side or the other. So both sides can come to the middle and meet and do a pretty good deal. And I think that that's evident in the amount of contracts that are being signed. Now, I promised you at the beginning of this video that there was going to be a stat that every buyer or seller needs to know about the Manhattan market, and that is the negotiability rate. So what do I mean by that? Well, how much can you you negotiate? How much are sellers going to have to come down? How much wiggle room do buyers have within that price? It is very dependent upon neighborhood, and of course, because we are a vertical market, it is very dependent on the actual building. But overall in Manhattan, the negotiability rate is at 4.6. So what does that mean? That means that we are looking at about a 4.6 discount from the listing price. That means on the whole, sellers are pricing their units fairly well, and buyers are still getting a little bit of a good discount. 4.6, that's a decent discount for Manhattan, but it is lower than it was last year. What does that mean? That means that there is less negotiability. Now, if the market continues to go towards sellers, and if it is a very strong market in the spring, that absolutely means that that negotiability rate is going to get smaller. For example, usually if you're buying in the West Village in Manhattan, that is a very competitive neighborhood, and usually that negotiability rate is 0. You're going to be expected to pay the listing price, or you're going to get in a bidding war and you're going to have above listing price, right? 0 is usually for the West Village. We have seen some discounts lately in the West Village as we're doing this recovery, but I can guarantee you that if the market gets stronger, if demand gets higher and supply balances out, that we're probably going to go back to maybe a 0 discount rate. So we have to look at it per neighborhood, but overall we're at 4.6. That is the discount rate that you need to know as a seller so that you can take that into account as you're pricing your listing, and as a buyer so that you can manage your expectations of what you may be paying for a unit in Manhattan. Okay, there you have it. Lots of interesting things going on in the market. It looks very interesting for next year, and next month we will be doing our year-end review, so be sure and tune in for that. Again, I'm Dewey Moss. I'm your New York City real estate resource. Take a moment, please, to like, subscribe, and hit that notification button, and I'll see you next time.